welcome to The Explainer. Today, we're taking the Pearson Edexcel AS Level Accounting Lesson 1 and turning it into a dynamic premium classroom experience. We're going to absolutely master the fundamental role and purpose of accounting. If you've ever wanted to truly understand the foundational ways businesses measure their success and communicate it to the rest of the world, well, you are in the exact right place. I am super excited to guide you through this material, so grab your notes and get ready to focus. Okay, let's dive into this. When you hear the word accounting, what is the absolute first thing that pops into your head? Is it just a giant pile of money? Maybe an endless, boring spreadsheet of numbers? Or maybe you picture a massive corporate HQ with a CEO making huge financial decisions. Take a second to really think about it. Because, as we're going to see today, accounting is so much more than just crunching numbers in some dark back room. It is literally the lifeblood of business strategy. Here's our roadmap for the explainer today. We've got 4 main stops. 1, the core of accounting. 2, the 2 worlds. 3, why prepare accounts. And finally 4, who uses the information. Let's get right to it. Starting with section 1, the core of accounting, and what exactly it is. Before we can even begin to do any actual accounting, we have to understand what makes a business tick on a basic, fundamental level. You see, every business starts with some kind of capital. Imagine a sole trader investing LKR $500,000 of their own hard-earned money just to get a business off the ground. From that moment on, they operate with a profit motive, right? They're constantly trying to make sure their revenue is higher than their expenses. But to track all of that, we need the fundamental building block of this entire subject, the financial transaction. A financial transaction is basically any business event or action that has a real monetary impact on the business. We absolutely must have a measurable event with a specific financial value before we can even begin to do accounting. So, once those financial transactions start rolling in, what is accounting actually doing with them? The textbook breaks this down into a really clean 3-step chronological journey. Step 1 is record. We systematically capture what just happened. Step 2 is analyze. We don't just blindly stare at the numbers, we examine and interpret them to figure out what they actually mean for our profitability or our overall wealth. And step 3 is communicate. We take all that brilliant analysis and we provide it to the specific people who need it to make decisions. Record, analyze, communicate. That right there is the heartbeat of accounting. Let's put this into practice immediately and see if you've got it. Think fast. Are these events financial or not? Number 1, you buy a brand new computer for LKR 2,000. Number 2, you sit down and interview a potential new employee. Which of these actually gets recorded in your accounting system? So the crucial point is that an event absolutely must be measurable in monetary terms for us to record it. If you said buying the computer is the financial transaction, you absolutely nailed it. Now, interviewing an employee, obviously that's highly important for your company's future, but it doesn't have a direct, immediate, measurable monetary value. Make sense? Let's move on to section 2, the 2 worlds, financial versus management accounting. We are now splitting the accounting universe into 2 entirely distinct areas. Let's play a little spot the difference here. And this brilliantly illustrates how the exact same business data is used completely differently depending on who the audience is. Take a look at financial accounting on the left side. It's mainly for external users, it focuses primarily on the past, basically reporting what already happened, and it follows incredibly strict, standardized, legally regulated formats. Now, shift over to management accounting on the right. This is for internal users, your managers. It still looks at the past, sure, but it is heavily focused on the future to help make strategic decisions. And because it's internal, it's highly flexible and totally free from those external legal regulations. To make absolutely sure you never confuse these 2 on an exam, I want to give you a tight visual formula to use as a memory hook. Literally, write this down in your brain. Financial equals external plus past plus standardized. Management equals internal plus future plus flexible. If you lock in these 2 formulas, you are going to instantly recognize which type of accounting you're dealing with in any test scenario. All right, jumping into section 3, why prepare accounts? Looking at the 6 core reasons. You know, you might be wondering if it takes so much time, effort, and money, why do businesses go through the massive headache of preparing these standardized financial accounts in the first place? Well, the textbook gives us 6 very specific reasons, and we can use the AACFPR framework to lock them in. We prepare accounts to assess trading activities, like, hey, did we actually make a profit? Assess management performance. Are the managers doing a stellar job or are they driving the company off a cliff? Control activities, keeping our expenses in check. Plan future activities, figuring out our next big strategic move. Finance, as in to assist in raising it, like proving to a bank we deserve a loan. And finally, report business activities to interested parties. I highly encourage you to memorize these 6 exact reasons for rapid exam recall. AACFPR. It's an absolute lifesaver. Which brings us to section 4. Who uses the information? The business ecosystem. Remember the third step of accounting from earlier, communicate? This is where we look at the network of people who actually rely on that communication. The absolute simplest way to understand this ecosystem is to divide it straight down the middle. You've got internal users, which essentially means management, the people operating on the inside, actually steering the ship. And then you have external users. This is a massive group of people looking in from the outside. Owners, banks, trade creditors, the government, even the general public. They all desperately want your financial information, but they want it for completely different reasons. Let's launch into a rapid-fire flashcard rhythm to really test your instincts. Match the user. I'll give you a scenario, and you tell me who the external user is. Ready? Who is most interested in whether a business can pay its short-term debts? The answer is your trade creditors, otherwise known as your suppliers. Think about it. If a supplier is giving you goods on credit, they do not care about your 10-year strategic vision. They need to know if you actually have the short-term liquidity to pay them back in 30 or 60 days. Let's keep the energy high. Next challenge, who wants to compare your performance, establish benchmarks, and maybe even size you up for a potential takeover? Now, what's really interesting about this slide is how we can deduce a user's hidden motives just from the kind of information they demand. If you guessed competitors, you are absolutely right. And I want to warn you against a common trap here. Lots of students think rival businesses don't care about each other's financial information because, they're enemies. Actually, it's quite the opposite. They constantly use your standardized financial accounts to benchmark their own success and try to spot your weaknesses. Let's hit one more quick challenge. Who needs your financial information specifically to assess your revenue, your expenses, and your salaries, all for the sole purpose of calculating the tax you owe? Yeah, that would be the government. They always want to make sure they get their cut, right? This just reminds us that accounting is the universal language of business. It isn't just used for strategic growth. It is literally legally required for compliance and taxation. Let's move to this and see how this builds our overall accounting vocabulary. Here is a quick flashcard grid of some crucial remaining words from the lesson that you really need to master. Profitability is simply the ability of a business to generate a profit. Pretty straightforward. Stewardship. Now, this is a highly testable term. It refers to management's strict responsibility to control and manage resources correctly on behalf of the owners. And a quotation is just a document stating the exact price that will be charged for a requested product or service. We have covered an incredible amount of essential groundwork today. So to wrap this all up, I am giving you an exit ticket. Before you click away, I want you to mentally answer these 3 questions to prove to yourself you've mastered the material. First, in one sentence, what is the 3-step process of accounting? Second, what is the core formula difference between financial and management accounting? And third, name 3 external users and tell me exactly what they're looking for. If you can answer these, you've built an unbreakable foundation. But think about this. If so many outside people rely heavily on these exact numbers, what happens when a business decides to legally manipulate them to hide the truth? We are going to uncover exactly that in our next explainer. Stay focused, and I'll see you then.